Back with us here on Chartbusters, on to earnings conversations. Then the company in focus is IGI, the International Gemmological Institute. The company reported a 9.6% rise in its revenue from last year. Margins also expanded from last year. We have Tehmasp Printer, who is joining in as the Managing Director and CEO of the company, and Eashwar Iyer, who is the CFO of the company as well. Gentlemen, good morning. Thank you so much for joining in, and congratulations on the quarter gone by as well. How do you 10% revenue growth for the first quarter? What kind of growth are you penciling in for the full year? And also a question on your realizations as well. We're down around 12% on the lab-grown diamonds certification pricing changes that have taken place. Right. So does this now become the new normal at around 950, 960 odd?
Yeah, it would be. And Eashwar can elaborate more. But on a year-on-year basis, it would be around 15 to 20%. That is what we are historically also done and striving for.
Okay, so you're saying realizations will hold around these levels, right?
That's right.
Right, and volume growth you're looking at for the year?
Volume growth is, at the moment, it is 26%
Yes.
or 27%.
Right.
And it's only, it'll only scale up.
Okay, all right. I just wanted, before we get into further details, lab-grown certification as a percentage of your total mix has come down to around 54% approximately. It was at around 60%. Is the need for testing going down?
No, let me just take that question.
Please.
I think what's happening as far as the lab-grown segment, the way it's evolving, at least for the India market, is that when this lab-grown business started, it was more in terms of stones getting certified. But and that's the story that we've been talking about in the past as well, in terms of the affordability factor that that provides, probably will enable the Indian consumers to come into the fray. Otherwise, this market was actually in the US.
Right.
So what we are seeing is a 5-6% increase in mix of lab-grown jewelry, which was 0% 12-15 months back, is now 5-6% of our revenues. So lab-grown jewelry typically will get consumed in the area in which it's manufactured, which is here in India. So we are seeing the trend that is at least indicating that the Indian consumers are now coming into the fray. And that is what is propelling the growth on the lab-grown jewelry side. So combined between lab-grown stones as well as lab-grown jewelry, the percentages have remained more or less the same.
You at the time of your IPO, you had raised funds and you had mentioned that you're planning to complete the acquisition of IGI Belgium and IGI Netherlands as well. Where has that progressed to? Is this completed as of
we
now?
completed that in December itself because we had a specific timeline within which we had to complete the process. So we did the acquisition sometime in the last week of December.
And by when does it reflect on your books?
It's got reflected even in December quarter as well as for the quarter this year.
Okay, all right. So you started the year with a revenue growth of close to around 10%. That's in revenue terms, with obviously all the growth came in because of the volumes. Just to pencil in numbers for 2025, what kind of revenue growth are you looking at? How much of that will be volume-led? And margins are holding steady at around this 64%, 65%.
Yeah, we actually declared a 57% margin last year. That's scaled up to 64%. Obviously, the efficiencies, the way the business model is evolving in terms of the flow through that happens because of the volume and the revenue throughput getting into the bottom line. So that's what's driven the expansion from a margin standpoint. But again, to the point that you made in terms of we did take a pricing correction last year. April, May is when we took the pricing correction, consequent to the movement of the lab-grown segment itself. So we had to keep ourselves relevant in terms of the certification pricing, etc. And that's the reason we took that pricing last year. So from that context, the volume growth is therefore at a higher scale versus the revenue growth because of we are cycling that pricing. But if you look at it from a sequential standpoint, I think the gap is insignificant. Actually, the revenue is growing faster than the volume growth, and which we think should therefore pan out over the course of the next 3 quarters. So again, 15-20% is what we had committed at the beginning of the year as well. I think we should stick to those estimates for this year.
Revenue growth of 15 to 20%. Margins, as you mentioned, you'll have done various tweaks on the operational side, and that's why your margins have improved.
Yeah, between 57 and 64. I think we should look at it in that range because quarter one is too early for us to, because we are also making significant investments because as the volume throughput is really going up, we are also investing in capabilities, both in people, expanding laboratories, etc. So I think the investments are going in the right place. So I think between 57 and 64 is what I think therefore we should guide.
Very wide.
Very broad.
It is. To say that. Of course, it is.
No, but to add to what Eashwar is saying, lab grown is a volume game.
Yeah.
And we are ramping up our gemmologists. We've already recruited 130 gemmologists, which is 14% of our staff strength,
Right.
to handle the volumes. Plus, we have taken AI into function.
Indeed.
And the other thing is that we have changed the product mix. You know, we are getting more and more natural diamonds also. So, you know, at IGI, we grade diamonds, you know, and we give you the origin, whether it's earth-mined or man-made.
Right. So, if you could give me a number, what is the charges typically you all do on certification of lab grown and of natural diamonds? What should the number be, difference? The average we have 950.
Yeah.
But if you want to split it up for us.
Natural diamonds will be just over $40, and this is just under $20 for lab grown.
And natural diamond is stable.
Right.
You know, it's rare, it's unique. So, you know, on lab grown, it's a volume game.
Yeah.
So, you know, so you get discounted on more the volume, more than, and, you know, the lab grown is actually increasing the consumer pie because of the affordability. Lab grown is not cheap.
Yeah.
It is more affordable as relative to natural.
What should your revenue mix look like? You know, going by all that you all said, lab grown is growing at a fast clip. On natural diamonds, you know, you're not, you don't see any big downtick in the realizations. So that's holding steady, the average price. But what should the ideal revenue mix be for you all?
At the moment, between lab grown as well as lab grown jewelry, we are in the 55-60% range. You know, I think that should hold as we get on during the course of the next 3 quarters.
But is natural emerging as a segment, because they're at 16.5, but you expect to go to 20 sometime in, at least by this year?
We were 18 last year. It's gone down to 16.5.
Yeah.
I think again cyclical between quarters. So I think we'll just look at it. I think it's early days, but between 16.5 to 18, I think that range is holding strong at the moment.
All right, gentlemen, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the quarters ahead.
Thank you very much.
Thank you so much.
Appreciate
you.
Thank you,
Nigel.
There's the management there of International Gemmological Institute on the quarter gone by, and of course to discuss the road ahead for the company as well. The stock doing well for itself today, 1.8% higher as we speak.